When people think of banks, they imagine glass buildings, ATMs, credit cards, and digital apps. It feels modern. But banking is one of the oldest institutions in human history. Long before modern governments, long before paper money, and long before stock markets, people were already depositing wealth, taking loans, paying interest, and managing debt. The first banks were not corporations. They were temples. This is the true story of how banking began, how it gained power, how it shaped civilizations, and how ancient systems quietly evolved into the modern banks that control the global economy today. Life before banks, the problem of wealth. As early civilizations grew, people faced a new problem. How do you safely store wealth? Farmers produced surplus grain, merchants accumulated silver and gold, kings collected taxes. But wealth created danger, theft, fire, war, loss. Keeping valuables at home was risky. People needed security, trust, record-keeping. This need gave birth to banking. Temples, the world's first banks. The earliest banking systems appeared around 3000 BCE in Mesopotamia in civilizations like Sumer and Babylon. Temples were the safest buildings in society. Thick walls, guards, religious authority, public trust. People believed, if the gods protect this place, my wealth is safe. So they deposited grain, silver, gold, precious goods. Temples issued receipts written on clay tablets. These tablets recorded deposits, withdrawals, ownership. This was the first form of banking records. Palaces and kings. Banking becomes political. Over time, kings realized something important. Whoever controls money controls power. Royal palaces began operating as banks, collecting taxes, issuing loans, financing trade, funding wars. Kings borrowed from temples. Temples depended on kings for protection. This created the first state financial alliance. Money and power became inseparable. This relationship still exists today. Banking in ancient Egypt. In ancient Egypt, banks were centralized under the state. Key features: grain banks instead of money, central record-keeping, state-controlled loans. Farmers deposited grain after harvest. The state redistributed grain during shortages. Grain receipts could be traded, transferred, used to settle debts. This was an early form of account-based money. Egypt showed that banks could stabilize entire economies. Greek banking, private money changers. Ancient Greece introduced private banking. Money changers called trapezitai operated in marketplaces. They exchanged foreign coins, held deposits, issued loans, and financed trade. Greek banks funded shipping ventures, commercial trade, and overseas expansion. Athens became a financial hub. But banking also introduced risk. When wars came, banks collapsed, depositors lost money, trust disappeared. Sound familiar? Roman banking, the foundation of modern systems. Rome took banking to another level. Roman bankers, called argentari, offered deposits, loans, payments, and money transfers. Romans used written contracts, account balances, and clearing systems. Banks enabled massive trade networks, tax collection, and military payments. Rome was the first civilization where banking supported an empire-wide economy. But Rome also showed banking's weakness. Financial crises in ancient Rome. When emperors debased currency, inflation rose, loan values collapsed, banks failed. During political chaos, Depositors rushed to withdraw money. Banks closed, credit vanished. Rome experienced bank runs nearly 2,000 years ago. When trust vanished, the system collapsed. Banking did not destroy Rome. Financial mismanagement did.
Islamic banking, ethics, and stability. During Europe's Dark Ages, Islamic civilization advanced banking. Key innovations: deposit banking, letters of credit, SOC, trade finance, and ethical lending. Islamic banks avoided extreme exploitation. Contracts emphasized fairness. The SOC system allowed merchants to travel without carrying gold. This was the foundation of modern checks. Islamic banking connected Africa, Middle East, Europe, Asia. It created one of the world's largest trade networks.
Medieval Europe. Banking families rise. By the Middle Ages, banking returned to Europe. Italian city-states led the way: Florence, Venice, Genoa. Powerful families emerged: the Medici, the Bardi, the Peruzzi. They financed kings, funded wars, controlled trade routes. Banking shifted from temples to families. Interest was disguised to bypass religious restrictions. Finance became global.
The birth of central banking. In the 17th century, banking entered a new phase. The Bank of England, 1694, was created to fund government debt, stabilize currency, and control money supply. This introduced central banking, government-backed debt, and national financial control. Other nations followed. Money creation shifted from metal to paper. Banks became permanent institutions.
Fractional reserve banking, the turning point. Banks realized a dangerous truth. Not everyone withdraws money at the same time. So they began lending more money than they held, creating money through credit. This system is called fractional reserve banking. Banking today, digital but ancient at heart. Today's banks use digital ledgers, electronic payments, online credit, but the core functions remain unchanged: deposits, loans, interest, and trust. Modern banks are faster, larger, more complex, but not fundamentally different from ancient temples. The core truth about banking. Throughout history, banking survived because of trust. When people trust banks, economies grow, trade expands, wealth circulates. When trust breaks, bank runs happen, systems collapse, governments intervene. This pattern never changes. Lessons from history. Banking did not begin with greed. It began with necessity. But every powerful banking system eventually faces the same test. Will it protect trust or abuse it? History shows banking creates civilizations. Banking also destroys them. The difference is discipline. Banking is a mirror of society. Banks reflect society's values. When ethics guide finance, economies thrive. When power corrupts money, collapse follows. The story of banking is not finished. It is still being written, and history is watching. If you want to understand the future of money, study its past. Because the oldest systems often repeat themselves, just in more advanced forms.